So, hello, and a massive hello to everybody. Hope everybody's having a great day, great weekend, wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling here. No trade calls, recommendations, or responsible for their own stuff. We're here for educational purpose only. So, what's happening? This is going to be a short update compared to last week, simply because there's not that much going on. Or, let me rephrase that. Even though there are a lot of things going on, we're pretty much still stuck. So, nothing much to add on what we've discussed recently, also on the management of the open swing positions and so on. Back SPX, so equities, pretty much a similar picture. I mean, a part of the fact that we've seen that YM bounce fairly aggressively, and again, what we suspect is, that just looks like it's rotation out of tech and into value. We discussed that in a lot of detail last week, so we're not going to go into that again. Now, SPX, key test here is we're hovering right at these highs. Now, our base case is still the same. So our call was that we wouldn't be surprised if we ended up spending the whole year inside this range once we started to bottom at these lows here. And essentially that was wrong in the sense that, I didn't mean to do that. It was wrong, not wrong, I mean, we said we wouldn't be surprised, but wrong because we did break out to the upside, but then we failed to hold that break. So we're still going to stick with that even though we're never surprised, we wouldn't be surprised to see this close much higher or close much lower. We think that the most probable scenario, unless we get something big either way in terms of news, so something like a great deal going through or being announced with China, then clearly we would expect this to happen. Or if we get really aggressive intensifying of the spat between US and China, etc., we would expect this to happen. So again, most likely we're just going to stay here and chop around inside this range. Now, as we fail here, what are the key levels to continue to look at, as a guide going into this week? 2800, 2700, which is that big pivotal level that you can see across the board on our quad screen that we have, with ES, YM, Russell, and NQ. And essentially 2600 was where we bounced these lows here. Now, keep in mind that the way this traded with this explosive move higher, right, even though we call it, low volume grind move, the bulls had every single chance to break this higher, and you would expect to make that run back to break free above what we call the false break zone. And that didn't happen. So our base case is still that no matter what, these moves, right, these ramps, so let me just clear this up so it's a little bit, this ramp that started with these gaps, this is just short covering. And the way these panic FOMO short covering moves end is that most likely the market is going to give back the totality of that ramp in a fraction of the time it took to ramp. Now, that doesn't mean it can't go higher, but sooner or later, we would expect this whole area price to come back into these lows. Now, we still feel that even if the market continues to ramp higher, the much nicer scenario for the bulls would be to see this area recover back down into these lows, filling all that gaps, getting rid of this nonsense squeeze, and then more constructively build in a healthier pattern to try and take out those highs. These low liquidity chop squeezes are just not healthy, and they're not good for the bulls either. So in terms of going to this week, as long as the bulls cannot take this out very, very quickly, we expect this to be the path of least resistance, that 2700 holding the key, and then this is pretty much where we're going to fight it for the rest of the week. Are we going to try and start a healthier rotation higher, or are we going to come back down and test those lows? Now, in terms of the two questions I get most often is, if we break higher, what are the targets to the upside? And if we break lower, what are the targets to the downside? If we break higher, we would expect that only to be with real Momo if there's like super deal announced with China or something like that. So at that point, really, any new high is possible, especially when you're trading at all-time highs and there's no roadmap to the left. Of course, we could come up with some projection targets, but essentially we prefer to just say any new high possible. Now on the downside, that really doesn't change for us, and especially if this is the start of a bear market, we feel and we believe that the healthiest move is for us to come all the way, that's not what I wanted to do, all the way back into the start of this latest ramp, which is pretty much the election night, and that's where we ramp from. And we think that on very ugly news or very ugly tape, that's what the market, that's what would be attracting. But that's really a little bit early to talk about that now, but it's definitely in the cards. And in terms of the way the tape is trading, as far as we're concerned, it hasn't changed. As we broke down off these highs, we said don't be surprised to see some very, very, very violent rallies, and that's the way, you know, the bear markets are. You get really rip your face off rallies, and you shouldn't be surprised to see those. But it's important to get a feel and look at the tape and see when the sellers are coming back in, right? And it's fairly clear that the sellers are coming in protecting key levels, and that you're getting buyer exhaustion at certain zones, and the only times we're really managing to grind higher is on those FOMO squeezes. So the feeling of the tape and the look of the tape is still very, very different to what it was before, and we still have a bearish slant here. So again, we'll have to see what happens. That's pretty much where we are. You know, the key things continue to be, one, what's going to come out of US-China? Number two, you know, how's this crude longs unwinding going to end? And most likely the answer is in tiers, both for the longs as the shorts, and the shorts as it always does. And number three, you know, what is the dollar got to do with all of this, and what are the implications of the dollar? So going into just quickly the bonds, we're going to look at the major markets. So ES, now we're going to look at the bonds. Nothing much has really changed. They're still holding heavy, so no big surprise. Our base case is still the same, is that they're trying to stabilize here, and unless they can manage to really get comfortable back above you know, this level here into pretty much, you can even call it the 140 zone, they're going to continue to trade heavy. If we get daily closes above the 140, you see how we had this previous support acting as resistance, then we could easily get a little bit of a squeeze going and maybe go all the way back up into the 145s, and then that's going to be a key zone. But unless we can make it back above those 140s, chances are this is going to continue to trade heavy. And if you're stepping back and looking at our reference chart, which is the monthly, you see that we're still below here, and really what we would be looking to the downside is that 200, right? And this whole previous zone here. So there's a room for a lot of pain. It is trying to base, and that's why we have to keep those considerations in mind, but it's still not looking particularly healthy. Now, in terms of crude, here we've had a lot of velocity to the move, you know, far quicker than we expected, even though we had those sells there into the 100. And again, as we discussed in the video, the management of that is really important. So right here, our base case hasn't really changed on the monthly, right? The failure here, this is a big chop zone. We'd expect it to come right back down, potentially all the way into this 50 on the monthly, which is these previous highs, and we're talking about the 55 mark as a reference point. Now, if you look at it on a weekly, you know, it went knife through butter here. Shouldn't be a surprise. It's just complete liquidation of the longs. And again, this is not a healthy move, right? So when you see these moves on crude, you do not try and get fancy trying to play short-term technicals. You got to let it pass, right? And that's just fairly classical of the crude market. And you know, people who follow it a lot more than us will tell you, but it's fairly standard, right? Market gets overly bullish into highs. The talking heads start to talk it up even more at highs, and then everybody starts to call for crazy targets to the upside. The market gets completely caught off guard, and then it's got to puke them all out. They come all the way back down until then the talking heads have time to change the narrative, all the new guys with the crazy calls come out, and instead of calling for 100, 200, 300, they start calling for, 20, 10, the end of oil, and then it's time to flip long again, right? As all those shorts have to unwind. It's just the usual kind of scenario. But here, it's just hard for, see people asking, what do you do here? It's really hard to try and get aggressively short here after you've seen this puke pretty much 22%. It's probably got some more pain to the downside, but you don't chase. It's not something you try and chase. So here we still think that the downside, our downside targets for the monthly are in those 55s, but anywhere here, you'd expect it to try and bounce. So if it doesn't bounce here, it's likely going to be extremely ugly. But you see here, you got these lows. You probably have people looking at, I suspect, stuff like this, right? So everybody's trying to, look at it where, and probably people were starting to look at them all the way down, keep on dragging it lower, trying to find somewhere to catch it. But, the first place, I think, on the way back down, which was interesting, was at the first level here, right? That clearly didn't hold it. Then we had a chance into this weekly previous resistance, and that went knife through butter. And this is the next chance. Sooner or later it's going to bounce, but I'd much rather wait for it here-ish than try and get in front of it now. And what you want to see is some kind of flush. Remember, it's kind of like if you look at gold or something. On these, it's much better to wait for some kind of a flush and a reversal candle. You start seeing some, wick to the upside or a wick to the downside. It's better to be a little bit late on the move, but wait for the flush to go than try and step in front of this and get in trouble. It's really not ideal, and especially going into the end of the year. It's not the way you want to end your year. Speaking of flushes and ugly stuff, let's look at gold. Gold is the same thing, right? If you remember, and we've been looking for those build longs on gold, and we suffered quite a bit here in terms of the holds because it was really took a while to take off. And then if you remember, what we said is we felt that the biggest suckers trap out there was to get long ahead of these 1238s, 1240s, because we expected this level to be protected. And especially once you start to see all this action, you can't get long into a brick wall. So right here, our base case doesn't change. Ultimately, especially if equities puke, etc., this should end up getting a bid. But don't remember, if you get very sharp move down in the market, so if you get a lot of panic, usually the first stage of the panic is sell everything to raise cash, right? So what does sell everything mean? Well, sell everything literally means sell anything. Sell everything. So the first part of the move, even if it's ugly, you'll likely see, stocks down, everything, gold down, you'll see everything being sold. Then there'll be a point where people will start to either try and buy more defensive plays, try to start to put money to work. But the first move, and that's what we may be seeing, and our base case was still that as we hovered here, we would very much welcome to have an opportunity to buy this on an ugly flush, ideally back below the 1200s. But if you look at it from a bigger perspective, you do have to realize that this is not a pretty chart, right? It's not a pretty chart, and you can argue all you want about the wheeling and dealing with China, et cetera, but this is not a pretty chart. Look at this. It's just not looking pretty. So it keeps on looking like it may need to flush because this down here wasn't a sufficient flush. And where would the max pain be caused? Well, the max pain is probably here trying to come back down and clearing all these levels and maybe breaking through that 1150. So we would start to look, on any move back down, we would start to look for possible build longs. We would be very, very interesting if there was ever an opportunity back below the 111. So 1100 at 1050. But we might not even get there. It's just an ugly chart. It hasn't been trading pretty. And, usually when that kind of When it trades like that, we just like to look for opportunity elsewhere, right? Because there are charts that are behaving much nicer. And last but not least is DXY, right? What's going on with DXY? Well, DXY is another tricky one. If you look at it on the weekly, our base case has been that this is a big choppy zone. It'll be very, very difficult to really have a clear idea of what's going on unless we get weekly, daily closes above this area. Here it looks like it's trying to go for those 98s. And on the downside, if we didn't close back below these 92s, we'd still say that this is still inside this choppy zone. Now, if you look at it, and I'm not going to go through the long-term implications and the long-term charts because we've done that before, but if you look at it on the daily, this looks like a fairly orderly build to clear the upside, right? We'll come back up, well, rather probably green. Up, we're coming back down, very technical, holds. We clip those highs, we get sold, but it's not ugly. It keeps on making a nice series of higher highs and higher lows. So it looks like it's really poised to continue to break and ultimately take a stab at those 98s. And you can pretty much look at this level is, you know, inverse to euro is the same as the 113 mark on euro. We're always very suspicious when market trades like this because it looks like it's a foregone conclusion. The price is almost too clear that it wants to rip hardcore higher here and that euro wants to puke below the 113. So we would be very, very cautious. Well, let me rephrase that. We would not be getting long DXY here ahead of those highs, and we would not be getting short euro ahead of the 113 break. Now, if the 113 breaks or these highs break, then you probably have to go with a break because they'll get some Momo. But it still looks like there could be choppy action. There could be a lot of choppy fake outs. And that's, you know, because think about those swings back in Aussie and Kiwi. They're still holding. They could easily move back and just be nice corrections for a continuation of a move higher. And really, if you think about it again, the stronger dollar would probably break, you know, a lot of things. You know, a lot of people say break the world, but it break a lot of things. It'll cause a lot more pain. So, and as usual, you know, Trump managed to, well, we could speculate on what happened between Trump and MBS after recent events to get crude all the way back down. And Trump's not going to be too happy about a strong dollar, right? Definitely not going to be happy about that dollar ripping through the 98s and higher. So we'd still be very cautious here. And if we're trying to be tight and if we're trying to look for asymmetry, that means that we're still looking to play the downside, not the upside yet. And that would mean tactical opportunities for euro as long as it holds from a daily close perspective above that 113. But again, we'll look at those this week. There's a lot of different things going on. Had some questions on cable here. There's just too much event risk, right? There's just too much event risk, too much headline risk. We still think our position hasn't changed all year or past years. If you want to hold a speculative position on GPB, shorts, we'd much rather trade that through Euro GPB longs than GPB USD shorts, and that hasn't changed. If anybody has a lot of interest in that, let me know, and we'll do a video on the video updates this week about that. Have an awesome one. Thank you for flying with 50. Take care, guys. As always, thanks to the guys who comment on YouTube or share on Twitter when it's out. Always very much appreciated. Take care, guys. Bye-bye.